Chris Heath joins me now. He's the CEO of Ventura Cannabis, trading on the CSE under the symbol VCAN. Chris, welcome.
Thank you. Thanks for having me.
Chris, let's start with an overview. What is the business of Ventura?
Sure. So we are a California branded products company, and we decided California because it's one of the largest markets in the world at 39 million people. It kind of sets the trend for the U.S. in general in many different ways. It has the oldest cannabis kind of culture to it, being that it's been medically legal for a number of years, and so we find California, between the market size and kind of how it's been a trendsetter, to be the place to be in to establish our brand and establish our suite of products.
Sure. So VCAN comes from a original business of having in and outpatient addiction treatment centers, and you've kind of stepped away from that to focus more on cannabis, but you're keeping some focus on the addiction treatment business?
We're really just keeping, I wouldn't say keeping focus on it. I would say that we are that's helping kind of fund the business, and that we have sold the outpatients, and we have an annuity stream for the next 3 years coming in. The inpatients, there are some synergies to market our cannabis products to those inpatient clients, because as studies have come out and shown the link between opioid use and how that can be treated with cannabis, we feel there is a strong synergy there. But we really are focused on growing our cannabis business through distribution, through acquiring distribution channels, i.e. kind of the dispensaries, and developing our products and putting them through the distribution channels that we acquire.
Okay, so targeting a MSO model, for want of a better description.
Sure.
Okay, cool. So you've got a really tight share structure, which is something I want to point out, because most cannabis companies do not have what we would refer to as tight share structures. Sure. So tell me how you evolved the company and recapitalized it.
Well, I mean, I think we are happy with kind of our structure as far as our balance sheet. We have a very healthy balance sheet right now. We're cash flow positive. We have a number of deals we're seeing in California that we can kind of take that that strong balance sheet and pursue. And then, we've signed a purchase agreement in Los Angeles for a vertically integrated business, which has a manufacturing arm. They're already developing a brand. They have that brand in the dispensing unit they have in Los Angeles. And so we look at that as kind of our home hub, where we can take products, develop products, and then kind of use this, if you would, like hub and spoke kind of model, where the hub is the manufacturing, and the spokes are the dispensaries that we're acquiring, and we can kind of start putting the products into the dispensaries through there.
Sure. The markets you've chosen, California and Oregon, some of the most oversupplied markets right now. What's your strategy for differentiating against such a crowded landscape?
Sure. So I mean, I would say Oregon, we have one dispensary there, but that was really to kind of dip our toes into the water. California is really where we believe that that where we should be for this company. As far as kind of how we differentiate, right now the market is a bit segmented, and it's a kind of it's in its early stages, and in early stage markets, you don't see a lot of segmentation among kind of who the target audience is. So we are looking to develop segments, primarily for the elderly, 65 and plus, upperly mobile males, upperly mobile females, around 35 to 55, and because of our link with the rehab business, opiate addicts, and develop products that are specifically targeted to those segments. Because right now, a 65-year-old woman walks into a dispensary, she sees the same kind of suite of products that the 25-year-old that maybe dropped out of high school or what have you, goes in and gets. So we are looking to segment the market, because it is kind of a new market, and we feel like that doesn't exist right now. So that's where we see we can differentiate ourselves.
Okay, and so tell me, what's the revenue picture look like going out 12 months, 24
Sure.
months?
So right now we are looking at probably an exit run rate of about $11 million between the purchase agreements we have, the LOIs we have, the term sheets we have. We're looking at about an $11 million exit rate for this fiscal year, and then we're looking to grow that to about $20 million the following year.
That's impressive. So do you have plans to expand into other states at this point?
I hate to be somebody that rules anything out, but right now the focus really is California. California is, there's so much to be done in California. It's, again, it's 39 million people, which is, a little bit bigger than Canada itself.
Sure.
So,
and one could argue the highest ratio of marijuana consumers per
one might say that
per state
one might
basis.
say that as well. So,
right.
so yeah, we're really focused on California right now.
Very cool. Okay, so California's, struggling under a marketplace that's at least in part still black market, but they have started to enforcement now.
Yeah, it's been very encouraging to see kind of the enforcement coming down the line.
You bet. So do you see the marketplace conditions in California improving for newer entrants like Ventura?
Absolutely.
Yeah.
100%.
Okay.
Yep.
So then what kind of strategy do you have in terms of branding that's going to attract your target segments?
Right. So, I mean, we have a very talented and branding team that's experienced in this market. We've engaged people that have deep knowledge of not just the cannabis market, but the California cannabis market, right? Because it differentiates between states and between countries, and it can be very specific, right? And so we've engaged people that know the industry very well, know how to speak to those people very well, and have kind of started to develop ideas and suites of products that that speak to those segments, specifically through what we feel is dosage control and discrete products. These four segments, again, the 65 plus, the 35 to 55 upwardly mobile male, 35-55 upwardly mobile female, and the opiate addicts, they all, in our kind of estimation from the research we've done, from the people we've talked to, they're looking for something that is discrete and something that has some sort of dosage control to it. Because a lot of these people, the last thing they want to do is, smoke a huge bong rip and be completely, out of it. They want something that they can, properly dose, like when you go to a bar and you get a cocktail, right? You know how much is, you have one cocktail, you know what that is. So they want something that they can dose, and they want something that is something that is discreet, that maybe doesn't necessarily say that they're smoking pot, because there still is a bit of a stigma around it. So there is a discreet factor to it as well, and that's how kind of wrapping that all up. That's how we can kind of talk to these different segments.
Mm-hmm. Do you think that because you're targeting an older segment, that's probably not by default thinking, oh, I could cure myself with some weed? Do you think there's an educational component to that in order to succeed in actually bringing in that audience?
Sure. I mean, I think there is, but I also think that there has been a lot of education. There's a lot of educational kind of components and literature and messaging out there right now, and I think that helps us. That helps us kind of as we're targeting these segments, and specifically the elderly. And I mean, the elderly. I mean, I don't know what the exact number is, but I think that people throwing out 10,000 people every day turn 65, right?
Yep.
So it's not a segment that's going anywhere.
Right.
It's a segment that's growing, and as the education around cannabis grows, and it's only growing, that segment will start to become larger and larger and larger and larger. And so that's why we feel that is a really good one to go after.
Okay, well that's great. That's a great introduction. We'll leave it there for now. Thanks for joining me today.
I appreciate it. Thank you.